Hey everyone, this is John from Blueprint. Today's Monday, July 31st, 2023, and this is a monthly asset allocation update video. We produce this video every month to give you an idea of the asset allocation changes that are happening within Blueprint portfolios heading into the next month. And we also produce this video in conjunction with what we call the co-founder's note, where this month we write about the start to the year for the S&P and the NASDAQ, which has been somewhat historic, at least in recent financial history since 1993. And we put that in the context of biases and the biases that can show up in the importance for investors to stay neutral, particularly looking through the lens of a trend following strategy. So if you haven't gone back to read that, I would strongly recommend that you do, and we'd love your feedback on that. So as we head into August, what asset allocation changes are happening within the Blueprint portfolios? Well, there's actually, relative to the last few months, there's quite a bit happening. So first of all, U.S. equities. U.S. equity exposure will decrease. This is not because the trend in the intermediate term or the long term has changed, but trends elsewhere in the portfolio that we're handing off to U.S. equities are now simply taking some of that exposure back. So the change in U.S. equity exposure, or the decrease in that, is around the edges, but it is decreasing heading into August, as well as foreign developed equities. So when you look at international equities as a whole for Blueprint, it's a combination of foreign developed equities and emerging market equities. Well, foreign developed is decreasing for the same reason US is. Emerging markets have now entered a long-term uptrend. Last month, they entered an intermediate term uptrend, and they're just simply taking that exposure back from foreign developed to get up to its baseline exposure. So for foreign developed and emerging markets, they'll both be at baseline heading into August. And it's important to note that while the mix is changing within international equities, the exposure, the total exposure dedicated to that asset class is not changing. Real estate exposure will increase because we now have an intermediate term uptrend. This is the first time in a while that we've had any sort of positive movement via trend or positive momentum enough to generate a rising trend state pursuant to our models, and we now have that. So exposure to real estate will increase somewhat, still underweight, but it'll increase going into August. US and international treasuries exposure here will increase slightly, but it's still underweight, and that exposure will increase in international bonds as we have an intermediate term uptrend there now. Inflation protected bonds will not change as we have downtrends there across both timeframes. And gold is now back to a long-term uptrend, which is currently how we express alternatives. And so it will increase going into August as well. The exposure to cash equivalents or short-term fixed income will also decrease. And this is simply handing back exposure that resides there from emerging in some cases, from real estate in some cases, and international bonds. That exposure will get pushed back to those asset classes as the trends have changed there. So what does this look like on a graph? Well, really the headline, the most important points to remember as we head into August for Blueprint portfolios is that exposure in equity in foreign developed equities and US equities will decrease, and emerging in real estate will increase. And again, this is not because the trend has changed in US and foreign developed. It's simply because of a portfolio management construct we use, that the handoff process of handing that exposure back off to asset classes that are now in a rising trend state. So what are the key takeaways? Well, we remain overweight US equity exposure. The trend is up and relatively strong on both the intermediate term and the long term. We'll increase exposure to real estate and emerging market equities. And as you'll see, as you go back and look at the written piece, the co-founder's note, we encourage you to remain neutral and focus on execution. And this is the execution part we are a broken record as far as that goes. We are completely focused and obsessed with process and executing that process. And if you have a statistically sound process that you're executing, the outcomes we believe will take care of themselves, which means that client goals will be met over the long term. But when you have a year like 2023, where from January to July, it's the third best start to the S&P and the best start in the NASDAQ, certain biases will show up. You can look at these periods on a historical basis and say, wow, that's really impressive. The trend was up. I would be exposed to those moves. But when you live through these periods and you have to execute and invest in these periods, that's really where the rubber meets the road. And so different biases can show up. A bias may look like markets have gone up too much. I need to reduce exposure. And that may go against your set of rules. It certainly would ours. We, as trend followers, let our profits run and cut losses short. Well, another bias could be that as the trend turns, you may have a bias for getting out faster or getting out slower, depending on your view, right? If you're overly pessimistic or pessimistic at all, if you're optimistic, these things have a tendency to push our buttons, so to speak, and get in the way of the disciplined execution of your process or of our process. And so we all often say that having a rules-based process does not eliminate our emotion. That's nearly impossible. But what it does is it removes emotion from the decision-making process. And that is key, and that's paramount. The disciplined execution of a sound process over and over and over, in our view, leads to better results in the future. So we're now in the dog days of summer. When the fall hits, often you see client events start to happen, or preparing for client events as we get into the holiday season. And if you're an advisor to business owners, you may be starting to talk about what year-end taxes look like. Well, how can we help with that? We produce a lot of content. We produce video content. We produce blogs and written content, but we also produce a lot of custom content for the advisors that we serve. And that can span a wide range of topics. So I would encourage you to reach out to us and see how we can help you develop content to better tell the story that you're trying to tell. Our contact information is on the screen here, blueprintip.com. You can reach out to me directly. There's my phone number and email, or reach out to anybody in our team for help. So with that, I hope you're enjoying the summer, and particularly the balance of the summer that we have left, and we'll look forward to seeing you back here at the end of August. Thanks.